This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. This is Joe Rabil. I'm going to give you a stock market update, and we're going to take a hard look and see what this new high in the S&P actually means. I think there's some things we got to keep an eye on, and I'm going to talk about kind of the confirmation I'd like to see, especially on the weekly and the daily, in terms of indicators that will give us a little bit more comfort in knowing that this could continue for a little bit. All right, so let's go ahead and get into that. Now, if you want to learn some more about some of these techniques, I would suggest starting with the book. You can find it on the website, rabilstockresearch.com/book. Also, if you do enjoy this content, please hit the like button and also subscribe. Okay, let's start out running through the market conditions for the S&P. We've got the sentiment, and it's still down. It's at plus 15% more bulls than bears, which is a jump from last week. However, we got to keep in mind that this when we were up here, it was at plus 47, 48. All right, and it's dropped down significantly from that peak. So it's definitely considered more on the bullish side. We're still in a bull market, and when you get a monster drop like that in the number of bulls versus the bears, you got to view that as a positive. All right, so that's how that's set up. Now, we have made a little bit of a jump in the RSI 5 on the weekly. It's up at 67, getting a lot closer to overbought again. So I've got that at neutral. It hasn't actually reached there. If it crosses that threshold, it will move to negative. Now, the volatility did show some changes. The daily is back to neutral. The weekly is still negative. We can see here on the right. I'll go through that in a sec. And then the trend for both the monthly and the weekly is still positive. The daily has moved to neutral. It's very, very close to turning back to positive. And then we have the momentum on the monthly is the only one that's still positive. The weekly and the daily are neutral. Daily jumped from negative to neutral this week. All right. So let's just talk about this for a sec. What's taken place here is we've had a little bit of a drop in. So you can see the size of these bars has stalled out. Now you can also see there are gaps. So you want to fill in the gaps to recognize the true size of the bars. That's a true range, right? So this was actually a pretty big bar here. So that's what the average true range means. All right. Now, if you think about it, this is dropping and we're overbought. So if we can get an orderly pullback towards the 18 or in that area, 2 to 3 day pullback, being overbought, the likelihood is this is going to drop and roll that down, and that could represent a really good opportunity, maybe somewhere around the 600 mark, if it does it in an orderly fashion. All right, if we get one of these kind of bars, then this is going to jump up again, and this is really not what you want to be seeing after a strong move like this. You want to see orderly, 2 to 3 bar pullback back into here. Now, when we switch over to the time frames, I'll go into this in a little bit more detail, but I just wanted to show you this because I do think if we work this back down to neutral, 50 or lower, and it's orderly, then this line is probably going to roll over and turn to positive, meaning the volatility is dropping at that point. And that could represent the first decent short-term buying opportunity in a little bit. The weekly is still showing, high volatility at this point. Now, I want to clarify something, make sure you understand. When we're going up, all right, with high volatility, it doesn't mean that it can't keep going up. It can keep going up. We've had periods where we've had high volatility and it's going up. What it's saying to me is that it's a much tougher environment to make money as a trader. All right. If you're trying to get in and get out, the volatility is higher. And that means that you can get stopped out a little bit more easily on both this time frame and this time frame if this is rising. All right. So you just got to be a little bit more careful. Now, you can pick your spots. When we get pullbacks, we can take advantage of it and try and get this deeper. And as I've been saying all along, this doesn't mean rising volatility doesn't mean you can't trade. We're just looking for better entries. All right. Now, so I just wanted to make sure I clarified that you can keep going. You can keep going up. It does signify a higher risk that the market can turn, but it can keep taking place. So the problem you've got is trying to stay in. If you use stops, if you're disciplined about your entries and stuff like that, you might be okay. But if you're getting in and your entries aren't really good and you're playing with tighter stops, the likelihood is that you can get stopped out when you're in a higher volatility environment. All right, let's switch over and start looking at some of the time frames. Nothing's really changing here on the monthly. We've had, since the beginning of 2024, we've had 3 red bars, okay? One here, one smaller bar here that held the 4, and then another small bar that also held the 4. Now, we've gotten this trying to create another reversal to the upside. The negative I see with this pattern is how long it's been since it's come down and touched the 18-month. We've had periods like this before, so it's not completely unusual for this to take place, but we know that we're getting close. You can start going back historically and saying, it's before too long, we're probably going to work our way back, especially when we're this far away. So, it's January. Most of the time by March, we start to see this pattern sort of working its way back. After a strong year, sometime in the first quarter, I would expect some, backing and filling, consolidation back, something like that. So kind of keep an eye out for that. The open for this month, every month, once we get above the open, you want to keep a really close eye on that, because if we go from green to red on a candle, that'll be pretty important, I think, at any point here for the next few months. All right, the weekly chart, the price chart looks fine because it had an abrupt reversal after gapping down and reversing back up. But we still haven't seen any improvement. MACD is still below its signal line. It is operating off of a reverse divergence I mentioned last week. So this didn't make a lower low here, all right, but this did. So we get this sort of positive short-term trading pattern that develops within the context of still a divergent DI and a divergent ADX, all right? Now, if we get this to pop, then what I would be on the lookout for is a climax move where we make a move to the upside and we get some form of a climax to the to make the market makes one more last gas move to the upside. So I'm kind of anticipating a little bit that is the potential to keep a close eye on what could take place, because we have this short-term positive developing with the MACD, and we still haven't seen a significant amount of improvement. But it's very possible if this shows more strength, green DI is going to pop here and keep going and potentially even take out the highs from before. And then that could get this ADX going and maybe make you think that we're starting a new move to the upside. We just don't have the right pattern in place to consider this a low ADX breakout. This doesn't have that. The QQQ is a little bit different. It's been going sideways, but this has been working its way up. Even the QQQ really isn't something I would consider to be an attractive low ADX breakout. It's a little bit closer than what we have here. But if we make a move to the upside, you got to be a little bit more careful as it plays out. So we'll stay in tune with that as it takes place. So what I'm looking for on the daily chart, I think is important to keep an eye on. We've made a really strong move to the upside. We've made this 18 start to rise. Now, it's not above the 40, but when the 18 is rising, we want to see a test of that line, and we want it to be orderly, obviously, to keep that average true range rolling over. All right, now if we get that orderly pullback in the form of 2 lower highs, then you're going to get a pinch play taking place here as MACD is crossing above. What else is going to take place is we're going to get this green DI to come back and test 25, and it should stay above. If it plays out that way, green should stay above 25 and it should stay above the red. So if we have that, we're going to have sort of our first real setup using the indicators where we get a pinch play here with green DI crossing and holding above. I think the likelihood of it crossing and breaking out would not provide as good a signal. Meaning if we moved up here and can keep going up, this kept going, yeah, you could, theoretically you could create a pinch, but it's going to be really far away from the 18. So ideally, we really want to watch and see a little bit of a consolidation. Now, it might follow through a little bit more, but the other thing we have to watch now is for a failed new high, all right? A failed new high would be, we're hitting a new high right now, okay? Green DI is not confirming. This is crossed above, but the MACD signal line has not. And then we get red bars, big red bars coming back down, especially through the 600 mark. If you have that, then this would be a failed new high. This is likely to cross back over through the signal line, and green DI is likely not to hold. Red will move back up. So if it were to take place like that, then we know they're most likely in a trading range and not the start of another big leg to the upside. So these are the kinds of things that I'd be watching here. We really, ideally, if the market's ready to keep going, we should have maybe a little bit more follow through, and then an orderly pullback, a 2 to 3 bar pullback would be ideal in this situation. Now, it's possible we could have an orderly pullback that just overruns a little bit and causes this to be more of a breakout play. So I'm giving you all the different scenarios that could take place. What we want to avoid are the monster red here, and there's two reasons for that. Number one, you're going to hurt these indicators, and number two, you're going to create high volatility if it takes place that way. If we get any form of pullback that keeps the average true range rolling over and keeps this above the signal line, keeps this above 25, I would say that's very, very positive in the near term, and we'll probably get upside continuation, and that really could lead to confirmation on an ADX basis that is probably going to lead to some kind of a climax. All right. Now, just lastly, we'll take a quick peek at the ADX on the hourly. We've made a really strong push, 18 and the 40 moving up at a strong rate together, and we have true confirmation on an ADX basis. So we could go through a little quick ABC kind of pause here, and it won't really hurt this. But we want to keep an eye out for a violent reversal, which would cause red to overtake green. So these are the kinds of things you want to be watching right now. Let me know if you have any questions. Thanks.